everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is the CEO of SD Bullion, Tyler Wall. Thanks for joining us, sir.
Hey, thanks for having me on, guys.
Yeah, absolutely.
So Tyler, you're obviously a bullion dealer, so we want to talk to you guys about the supply situation. It's been a crazy couple of weeks with Russia, Ukraine. There seems, silver and gold. Gold was briefly above 2,000. Now it's just a little, as we're doing this video, it's a little bit below 2,000. Or actually, let me check. Yeah, it's a little bit below. What's the supply situation like overall? Are you seeing expanded sales, crazy sales?
Oh yeah. So this month is actually on pace to be a record month, being every other month before.
Even over last year when the Silversqueeze was happening.
Even the short squeeze, January 2021, this month on track to beat that right now. We're seeing huge demand for silver. We saw an uptick actually in gold sales once that day that Russia invaded Ukraine. We saw a huge increase in percentage of gold sales too. So in addition to record sales, record order count, we're seeing actually AOV, average order value, increase as well, which is at a record level too. So we're seeing a different type of customer come into the market compared to what we have historically. We're seeing a lot more people that are new to the market, a lot more people that may have been looking at yields and checking accounts and, oh well, I get a 0.5% yield here, I can buy some bonds, get 2 or 3%, and they're starting to run the numbers and start seeing the CPI, the CPI 10, 15, whatever you want to call it. I mean, obviously it's manipulated low, and they're starting to even see the actual government figures come out, and they're saying, well, wait a minute, if I'm getting paid 0.5% in my checking account, or I'm getting a yield on a bond or a dividend payment of 3 or 4%, what does that actually equate to when inflation's at 10 to 15%? And maybe I should be looking at hard assets, even if I paid 0.25%, 0.5% to store it, or if I took it to my house. Even if in that situation, purchasing power is being preserved by the physical metal. And so we're starting to see these people that haven't invested in precious metals before, maybe thinking that they're going through school and their finance education and being told about this, well, precious metals don't pay a yield, and they're starting to figure things out. And we're seeing a lot more new people entering the market, and they're entering in a big way.
Are you seeing a new customer
lots of new customers, lots of new customers, more than typical. That we're on pace for a record new customer count this month as well. So we're seeing huge demand. We're obviously also seeing more trouble buying our precious metals to replace the inventory that we're selling to our customers.
What you were just speaking about delays, I noticed on your website for American Silver Eagles, which I think is one of the most popular items here in the United States, you're on product delay here till March 31st. Like, meaning you're out of 2022's the new order ones, and they're coming in. What does this mean?
Yeah, so we're selling a product on delay. We have a purchase order against that. We just know that it's not in the vault right now. We have inventory in the vault to fulfill the orders that were sold live, but on any future orders, we know we can project out when those orders are set to hit our vaults, so that we have a purchase price locked in, or a purchase contract locked in, but they're going to be sold on delay. So we're starting to see some of those products go on delay. The Silver Eagle, like you point out, the Silver Maple, I believe, might be on a little bit of delay. And we do have some sovereign mint coins that are still in stock live, but none of them. I was talking to guys before the show, but we had a marketing meeting this week, and they're like, okay, what are we going to sell? And they're talking to our product management team, and the product management team's like, I don't have anything to put. I don't have anything to put.
They were asking. Marketing was asking, what's the special deal this week?
Right.
Like, shit, I don't have anything.
Right. This is a weekly meeting that they conduct, and they typically have product managers typically go out and acquire a couple 100,000 ounces of a certain product to get a special price to our customers. We'll have something out, but it was a big struggle this week coming out with something to feature next week, because our inventory in our vault's probably down 50% since we started seeing this silver surge a couple weeks ago.
So you have a certain level of inventory in your vaults that's,
right.
Just pick a number, 50, 100 million. You're at what, like half of what your normal preferred inventory levels are?
Right. Yeah, we are at half. I mean, we're different than the other bullion dealers that are a lot the major bullion dealers that I know of, and that we set a target ounce value. So we constantly maintain a certain target value of our hedge position that we're buying silver for. And if it goes below that target position, we're buying more. But the actual inventory that's in our vault right now is about half of what we normally would have.
Wow.
In our depository in our vault. So
Well, I was looking through just like your products here, and I'll just go on 1 ounce silver rounds. And once you scroll down here, everything's notify me, right? It's just
right,
like lots of this stuff is just
yeah,
gone.
yeah. The variety of products is gonna decrease because
Like,
we're
I
in
mean,
a
this a generic thing like the Sunshine Mint
yeah.
rounds is seriously, really?
Yeah, like what you're gonna see is these mints. I mean, at this point, the demand is just so high that it takes time to flip out the dies at the mints. They just want to put the die in that they want to kick out, hundreds of thousands as quickly as possible in the one design. So we're going to start seeing the selection decrease. And like I said, even the major designs, even the sovereign mint coins or the most popular Buffalo coins, even those are probably going to go in delay in the next couple of weeks.
We were talking also about specifically the American Silver Eagle with the U.S. Mint.
Right.
Now, as I understand it, there's only a handful of companies that the authorized purchasers that can buy
Right.
direct from the U.S. Mint, you were telling me. And
Right.
something's going on where the U.S. Mint just doesn't have the silver, you were saying? Or tell us that
Well,
story.
yeah, on the silver side, on the silver side is the U.S. Mint still an allocation. So like every other week, they're offering a certain amount to the suppliers, and you put in your request, and they decide what percentage of that request they're going to fulfill, and nobody's getting 100% of what they're asking for. It just depends on how much they have available. On the gold side this week, what we saw was talking to our suppliers that the U.S. Mint was really struggling with acquiring gold blanks. And, at one point, we were being told that they were considering increasing the cost to the authorized purchasers by up by 1% from what they normally would purchase at. So I think normally we were around 3% to an authorized purchaser, and they were going to adjust it to 4% because they didn't have any sellers at the current price that they were paying
Okay,
for the gold blanks.
let's unpack that real quick just to
Yeah.
explain it. So you're saying the U.S. Mint is having trouble acquiring blanks, so
Right.
they need to bump up what they're charging
Right.
the buyers by so that they have more cash to buy the blanks from Sunshine Mint or whoever is
Yeah,
this.
just to increase the incentive to the sellers to sell their gold. If they have some, maybe they'll sell it at a higher price. So it's just
Okay.
capitalism um, in
It's
play there.
It's the
So
government. They don't just make these decisions quickly. They gotta. I guess
no,
so. They can't get the Sunshine Mint or some of those to produce enough blanks is the problem right now.
I mean there's just so much demand. I mean
Yeah,
there's
I
so
get
much
you.
demand. I mean it's a capital intensive market or industry, and you see these surges of demand 2 to 3 times in a month, and it's hard to have enough bank lines available, credit lines. I mean, the U.S. Mint's got a lot of bank lines, but these other places that are private entities, they got to invest money in infrastructure, and you just can't scale up an operation 2 to 3 times, 2 to 3x, overnight. So I know there's been capacity added on since 2020, but still the demand that we're seeing right now is still not enough.
Do you think it'll go higher than 4%? What they're charging you?
They didn't actually go up to 4%. They actually were able to find some work out a deal that they were able to find some gold blanks in some way, but it got us buying some extra ones because it feels like you're watching the nickel market. It feels like it's only a matter of time in precious metals. The nickel market, I'm sure you're aware of this, but
Yeah.
that actually had a huge effect in with the suppliers that we're talking to on a regular basis as well. Nickel market was up 250%, I think, in roughly 2 days. And I think it was like Monday and Tuesday. So I was on the phone with one of our suppliers on Tuesday, and they had told me that their bank, in addition to all the margin calls that are going on, and margin calls were increasing to them, but their bank actually increased their interest rate by 2% in one day, and we're not. 2% on hundreds of millions of dollars of inventory is a big number. So banks have actually been scrambling, with this nickel market. It's kind of caused a liquidity issue, and trying to get the banks are trying to trim down some risk. Most people are short in this market. Most of our competitors are short the metal. Most of our wholesalers are short the metal. And if you see something like nickel in our market, that's going to hurt them very tremendously. We don't short our metal. We maintain 75-80% of our net asset value in inventory, and we do not short that inventory. And some people call it risky. I say no, what you're doing is risky, because look at the nickel market, and do you think the dollar is going to go up, or do you think precious metals are going to go up? And since I was always a silver bug before we started this business, to me, the answer is easy. It's like, look at history. Look at 100 years, guys.
You're playing the long side with your inventory, basically, by not hedging.
Well, I mean, I say we're playing long. I think they're playing short. In a situation like nickel, I don't know how you can argue that I'm wrong in any way, because for us too, we can save money, because we're not having to put millions of dollars into our futures account to short the metal either.
Yeah.
So these people are having to put millions of dollars to short their hundreds of millions of dollars of inventory. We don't have to roll over contracts. We don't have to put money in our futures contract. We just have to have a fixed level. And if you buy from us, we're going to go out there and replace it. And there's a certain level. If I can't replace it, well, the website, we might have to shut down sales for a little bit until somebody else will sell me some, because I'm not going to sell you all mine.
Well, here's the thing, though. With a company like yours, if you can't acquire inventory, it's like you're really screwed, because you've got a certain level of overhead for real estate and headcount where you've got to have inventory going through the system just to make the business function. Is that like a stress? You're not able to grab enough inventory right now, right?
No. So I mean, we've been in business for over 10 years, and our actual fixed costs are so low. We've grown from day one without the use of debt. So we've always grown within our means, and we have. That's the last thing I'm really worried about. I'm more worried about not being able to buy more silver when it's going to the moon, but I am worried about covering fixed costs. We have so much inventory that somebody's going to be buying that inventory from me at some price. And I'm not worried about that at all.
I just want our audience to understand, even though premiums are really high, you're not buying those silver eagles at spot, right? You're paying significant for you to acquire your inventory. You're paying way above spot just to get your inventory, right?
Yeah, we're paying way over spot. Obviously, U.S. Mint charges the authorized purchasers somewhere between $2.25, $2.50 to $3 over spot, which, I mean, that's obviously way too low in this market. And then obviously the wholesalers decide that they want to, the APs, they decide that they want to mark it up whatever they want to meet the demand. So currently it's obviously it's very expensive for us to go out and buy, eagles or maples.
Yeah. So just so the audience understands, companies like yours, you don't even get to buy direct from the mint. You're buying from other people who buy from the mint.
As it stands today, yeah. And it's kind of an evolving landscape, which my argument would say that we meet all the criteria to buy from the U.S. Mint. So hopefully we'll change that someday.
Yeah, gotcha. But every mint's different. You do buy direct from some of the other sovereign mints.
Yeah, some of the mints. Yeah, right. Yep.
Okay.
So Tyler, thank you very much for hopping on Zoom with us. We really appreciate it, and let's do it again. If we get a Silversqueeze going, let us know, and we'll talk again.
Awesome. Keep up the great work, guys, in your forum. I visit that almost daily, and that's a great community that you built over there. So I really enjoy it, and you guys keep it up.
Yeah, we appreciate it. Thanks. Have a good one.
Thanks.